Okay.
All right. Let's see here. Oh, and you can see where's the, I think it's on the top left. It'll show you how many people are live. Like where it says up there live 1080p, and then the timer, it'll have a little eyeball thing, which I should probably go on to that and see different browser. It shows us live. Volume is off. That's great. We are in about I think usually it's about a 10-second delay, by the way, for like, so if you see a chat, it's, been waiting for us for a little bit.
Okay.
All right. Looks good. Give it a like. Maybe people will see it more. And let me do a quick post on LinkedIn over there.
I don't have channel game like you, so we're gonna rely on your network, not mine.
We'll get you going. That's what we need to do. Just get yourself sorted out. Up the LinkedIn game. Let's see here. That one we can delete and hit a like. Repost right now. All right, let's see if anyone shows up from that. And we can get cracking along. All right. So back over there. Where did you go? Oh, there you went. Great. Okay, I think I have everything all put together now. You all put together. You have your water. I don't have my water. My water's over there. I'll be right back. All right. Oh, you got coffee or tea?
Coffee, water, the whole thing.
All right. Tell me about your coffee game. What's your how do you do your coffee?
Using a filter pot now. I like filter coffee. And
Nice.
So we're trying to optimize for price versus taste. And then because we also half the time we mix in decaf. And so that kind of, you don't want to spend a lot of money on really high-end coffee and then ruin it with mixing in decaf. So it's kind of like trying to figure out that. But the best thing that we do is, now that we have business in Europe, there's a coffee shop in London called Monmouth, and they have amazing coffee. And so we buy like 2 kilos every time we go over there, and it lasts us like a month when we come back. So that's
good.
Yeah. What do you do?
Are you doing like a pour over then? Or you just have a normal coffee machine?
Coffee machine. Yeah. I mean, I've done the pour over. I love all that stuff, but
it's a pain in the ass.
Yeah.
Yeah. No, I'm a coffee snob, so I have my crazy chrome Italian espresso machine and 2 different grinders. I have my cold brew tower. I have my little pour over station.
Yeah.
I have my, I'm ordering direct from the roaster, and they show up once a week in the mail. It's
oh yeah.
I have it dialed in over here.
There are 4 machines on the coffee machine, different types of contraptions on the counter, but I only use the one. Sarah uses the other ones.
Oh, I see. So she's the coffee snob, and you're the you're just there for the ride.
Yeah.
Yeah, I made the mistake of not mistake. It was a very nice thing, but I think it was our 10th anniversary or 11th anniversary, sometime around then. I'm like, you know what? I'm going to get my wife a cappuccino machine. I didn't know anything about anything. You know what I mean? I called it a cappuccino machine. And then I did the biggest mistake I've ever made in my whole life, which is I started researching espresso machines on the internet.
I'm sure that's a rabbit hole.
And so my $300 budget quickly became a much larger budget. And so I picked it up and I said, okay, here's happy anniversary. Here's the thing. We have this, and I'll make you a cappuccino every morning for the rest of our lives. Now we're married nearly 30 years. I'm thousands and thousands of cappuccinos in, probably approaching that 10,000 range as we get there. I do the art for her every morning with a little heart, and
Oh, nice.
that's our little morning time.
Are you an audiophile as well?
No, but I play in the audiophile space, right? My ears aren't good enough to be an audiophile,
Okay,
right?
it seems like
But my budget is, right? I spend audiophile money, but I can't really hear the distinction. You know what I mean? It's mostly for the endorphin rush of getting new speakers in the mail. Yeah. So I did get one. I have my fancy, open back headphones, so I got some of those things that I spent too much money on. I got new cool, call me a budget audiophile. How about that?
There you go.
How about yourself? Are you audio guy? You just don't care?
No.
You're just thinking the correlation between
fancy
coffee and audiophile is really close.
High quality. Love doing too much research on things. That's your space.
Yeah, I just ordered speakers for my desktop that I really love, and they took me like 10 weeks to get them. It's that kind of stuff. So they were really good. They were only like $600. So budget audiophile, not like not like those guys, but not like those guys either. Just playing at the edge. Like they'll let me in the room, but they don't really want me there. Which is the case for most rooms I go into. They're like, yeah, you can come in. Wow, you're a lot. All right. We have some people who've joined us now. So hello, everyone. Feel free to say hi in the YouTube chat. We cannot see your chat on LinkedIn. So if you're watching from LinkedIn, you might want to pop over on YouTube if you want to talk to us. But you can certainly see everything. I think I might be able to see your comments on LinkedIn, but we can't respond to them from here. So there you are for the few people who are out there who caught us on time. Well, Sam Adams at Vert, welcome to our second live show. And we're going to talk about whatever we want to talk about. If you got here early, you heard us talking about coffee and being audiophiles, neither of which we really are. Well, I'm pretty coffee-y, but Sam is neither, but his wife is. So you're all caught up now with all the uninteresting stuff that we got. You can always dial back and watch the recording. And Sam, welcome.
Yeah, great to be here, JD. Really appreciate the invite, and good to see you again. Lately we haven't seen each other that often. Saw you at Future Proof.
Once recently, we saw down at Future Proof, kind of randomly ran into each other, which was amazing.
Yeah.
I think the first time we met was in London when we came out to visit you.
Yeah, that was 2012 or
2013, I think. Yeah, it was right when Dimensional was launching the European Sustainable Funds, because that's what we were out there for.
Yeah. So, I should everyone knows who you are. I should probably introduce myself, and then how we know each other, and then how we're gonna, and why we should be talking about sustainable investing of all people.
Shouldn't everyone be talking about sustainable investing? It's exciting, fun stuff.
Absolutely. Let me tell you a story about that. When I left Dimensional and came back to the States, the customs official said, "What brings you to the United States?" I went, "Oh, we're moving back to," and he goes, "Why?" And I said, "To start a business." He said, "What kind of business?" I said, "A sustainable investing business." And he looks at me with a quizzical look and he says, "Shouldn't all investing be sustainable?" And I was like, "You're absolutely right. Of course it should be." But then I thought about it and I was like, he probably meant like economically sustainable, like not the green version, like it should just last. And so about a month later, I got the electrician coming by the house to put in an EV charger. And this is in Marin County, California. And he's chatting with me. He says, "So what kind of business are you in?" I'm like, "Oh, I decided not to use sustainable." I said, "We're in a green investing business." And he said, "That's a great spot to be. Weed is where it's at right now. You want..." All my friends are making piles in that right now. I was like, all right, I got to go back to sustainable investing.
Or change your business model, because he's probably right. That seems to be the cash cow.
Exactly.
Yeah. Go back in time, get in on that early,
we will talk about the difficulties of defining sustainable investing as well. Anyway, with that story, I'm Sam Adams. I'm a co-founder of Vert Asset Management, and we are not an advisor. We're an investment manager. We serve advisors. All of our clients are financial advisors, and we help financial advisors do more sustainable investing. Our mission is to mainstream sustainable investing. The idea is the more money, the more capital that's shifted towards sustainability, the more that companies will be encouraged to manage their affairs, look after profit with people and planet in mind, be more responsible, those types of things. It's not a do-gooder type of strategy. It's actually a capitalist strategy. If the owners of the companies demand that companies be more sustainable, they will have to do that. That's the idea. So we help financial advisors do more sustainable investing in two ways. One, we have an investment solution in public real estate. So if you have an allocation to public REITs in your portfolio, we give you an authentically sustainable, financially successful, robust investment solution. It's the Vert Global Sustainable Real Estate ETF. We've been running it for 8 years. It allows advisors to confidently move assets to a sustainable solution for their clients. That's the one thing we do. The second thing we do is we educate financial advisors on how to do this. There's a lot of advisors with not as much experience, not as much confidence, not as much knowledge about sustainability as our friend JD here. So we do a lot of education. Let's see, I wrote a book on it with Larry Swedroe, Your Essential Guide to Sustainable Investing. My co-founder, Sarah, who's also my wife, teaches the Certified Sustainable Responsible Investing Counselor designation, CISRIC, for the College of Financial Planning. So this is a big part of what we do. And when JD launched this channel, I said, this is great, because JD is one of the guys I know that knows a lot about sustainable investing. As a practitioner, as an advisor, I can ask him a whole bunch of questions that we get from financial advisors. So,
all right,
that's what we're going to try and do.
You said two things that I want to make sure we talk about today. So I'll just plant that seed for you. One was, you said authentic sustainable investing. So I want to talk about that for sure.
All right.
Also, the fact that your co-founder and your partner in your business is your wife, and that has its own challenges. And so without getting in trouble, I want to hear more about what that's like, and how you navigate the, all the things that everyone who's listening is like, yeah, that would be complicated sometimes, right?
Yes. But when we get to that, right, we got to talk about the conversation that my wife and I had with one of your business partners back then. It was very illuminating about that. So
awesome. Definitely. We'll talk all about all that stuff. So I'm definitely talk about those, as I'm just kind of noting down things you say that I'm like, ooh, I want to know more.
Circle that back around. So for those of you who don't know me, I was at Dimensional for 20 years, early 90s to 2013. The second 10 years of that, I was heading up their European business, and I was actually working closely with JD's old firm, because I was part of the team at Dimensional launching the sustainable investment funds that they were launching at the time in around 2008. And in 2012, I was trying to launch a sustainable fund for Dimensional in Europe. And I put on a conference for financial advisors in London, and got JD and his partner Brent to come over and present and be speakers at this sustainable investing conference.
Yeah, it was a really big ask. It was a lot of trouble, and I hated the whole thing, flying out to London to talk to financial advisors. It was really rough. But as for you, I would have done anything. So
Well, thank you. I appreciate you taking that sacrifice. And this is kind of what we've figured out, is that the case for sustainable investing isn't that hard to make, right? So you have the majority of big institutional pension funds have already started integrating ESG. Individual investors want it. Vast majorities of them are interested in it. We'll talk about all that. But the advisor community is more reticent, more reluctant, more skeptical, and for good reasons. There's a lot of crap that the financial services industry has peddled out there in the name of sustainability. So it makes sense that they're a little less enthusiastic about it. But that's what I thought it would be a good idea to ask JD about his experience. And so maybe we'll do it like this, JD, if it's okay with you. I'll ask you the questions that we get from advisors about sustainable investing and how to do it and all that. And then I want you to share how you did it. And I'm confident you're going to have some great answers. And then I might ask you, like, what do you think about, or your thoughts on other approaches we've seen advisors use? Like, what do you think about, this other way of doing that? So that's kind of generally the approach. What do you think?
I think that's great. Let's go.
All right. Okay, let's start with a kind of an introduction. What got you into sustainability in the first place?
Honestly, I joined Abacus Wealth Partners back in 2007 because I have the best market timing ever. I tend to join industries right as they're about to crash.
Let me know your industry you're joining next. Okay, so.
Yeah, it's a little. I try not to switch industries because I don't want to tank our economy. I also joined an internet company back in February of 2000. Right, it's like right before, right,
Ooh,
and then
nice track.
What I want to do is I want to get it to the bottom so that I get a lot of credit for the growth. Right, is this perfect? I get full credit for the recovery. So I joined Abacus, and that was one of our primary values, really. And Abacus was in from the very beginning into sustainable investing when there was probably one or two funds out there that existed that you could use, and they were all not great. And they all over concentrated in tech companies and banks, which that was obviously not a great thing two industries to concentrate in 2000 to 2015. But we did, and we learned a lot, and we always had a sustainable option for clients. And then where I really got my crash course was in like right around when I joined. We went to Dimensional and said, we need a better solution for sustainable investing. We have these things, and we want you to create this. And Dimensional, of course, as they usually do, they say, oh, you want something like this? Hold on a minute. Let me go check this out and see if we can figure it out. And they came back with something way better than we had ever envisioned, right? Because they sent their researchers onto it. And they said, oh, look, you got some client seed money to put into this? We said, yeah, no problem. And then, of course, right as it was starting, the 2008 financial crisis happens. And so all of a sudden we're like, oh, well, I guess we don't have to worry about capital gains when we move clients into this fund. And so we were actually able to move a lot of money into those solutions very, very quickly. And that development process of those funds and going back and forth and talking to the people they were using for screening and doing lots and lots of meetings was my kind of do-it-yourself crash course into sustainable investing. And then being around the experts that Abacus had and the people who were, and the experts that Dimensional had, I picked it up as I went along. I was never the biggest expert in the room, but I was frequently the loudest and most enthusiastic cheerleader in the room. So I actually get a lot of credit for knowing a lot of stuff about sustainability when all I am is just really loud about sustainability. I'm a very good parrot of all the really smart things that the smart people develop, and then I say it, so then everyone thinks I'm really smart.
Yeah.
That's as much humility as you're going to get from me, by the way.
Well, yeah, well, at least I got some from you, so.
Better than most people get. So, call it a win.
Well, for years and years, I've done that. I listen to really smart people and then, try and share that sometimes in a more streamlined way or joined up way or in a way that connects with people, but also encourage advisors to do that, right? I mean, I think we've all borrowed things from all the different gurus that came before us, and you put your own package together And that's kind of the genesis of this call as well, right? How do you do it, and what do you see other advisors do? So,
Yeah,
um,
absolutely.
um, so let's try and define sustainable investing, because it means different things to different.
We're going to solve the
Well,
biggest problem in sustainable investing is to define it, right?
you always got to start with that. So let's do it the way you define it, maybe personally, but also in how you explain it to others.
Oh, how do I define it? Okay. What's the term that everyone's using these days? Is it sustainable, or have we moved on and trying something else?
Oh, I've got so many stories. There's so many advisors are like, they went from sustainable to ESG. They went from ESG to sustainable. They dropped all of that and they're responsible. Like, there's different different terms come in and out of favor. ESG,
Which is the current one? What's everyone using now?
huh?
What's everyone using now? What's
I think we're
the
leaning more into sustainable, and some people into responsible, right? Because
Okay.
she's
So
been
those are both popular these days. We need to pick a new one so we can just start, going into the next one. So if anyone's watching, you can feel free to comment on your idea for what the next big trend of the name for sustainable investing is. It's all kind of the same.
Yeah.
I used to try and break down into details like, okay, this is what sustainable means, this is what ESG means, this is what this, and trying to have all the different categories and the heat map of all the different kind of things. But at the end of the day, like the way I define it in my head, which is a little bit not the way I talk about it to clients, I think of sustainable investing as finding some factors in your investing criteria that indicate that a company is using fewer resources than their competitors. For me, that's the rational explanation of both why we would do sustainable investing and what it is. We're taking other factors that are non-financial that indicate that they use fewer resources.
Yeah.
So if someone has a recycling program, I'm like, oh, well, they're probably using fewer resources. If someone is using, they're buying carbon credits even, right? Which, we can have a big debate around how effective that is. But at least they're trying to create fewer resources. And in my view, if all of these kind of values filters are just indicators for me that people are trying to run their business in a way that lasts multiple generations and doesn't just eat up the things around them and ruin things.
Yeah.
Because a company that can do that and is thinking that way is also thinking about, if it's a manufacturing company, they're trying to have less waste on the resources they use to make their products. Why? Because that's cheaper to have less waste, or it should be ultimately.
Yeah.
And if you have the mindset of sustainability, you have the mindset of efficiency. You have the mindset of doing it right as opposed to doing it fast or cheap. If you think about that triangle of,
Yeah.
you can have good quality, you can have it fast,
Yeah.
right? Or you can have it, cheap,
Yeah.
and you get to pick two,
Yeah.
right? The sustainability always has to have the quality be high,
Yeah.
right? And then they get to choose whether, okay, are we going low cost, or are
Yeah.
we going fast?
Yeah.
And I don't really care as long as the product is good. If it takes a little longer to get there, as I was talking about my speakers taking 10 weeks to get to me, that's actually a bonus. Like I don't want it to come to me fast.
Right.
I want to have that anticipation of my purchase for 10 weeks, because that's the funnest part about buying anything, is the time between I'm going to buy it and the time you get it is definitely the most fun.
That's throwback right there. That's not
Right.
we don't live in that world anymore, but I appreciate
You got to buy the right stuff, So that's kind of the way I think about sustainability. And then, the other piece of it is purely a values play, right? What do you care about? And do your investments in the world match what you care about?
Yeah.
Now, I think that there's likely a positive future correlation between higher returns and investing according to your values, for lots of reasons. I believe that. Of course, I'm not the person who is a researcher and has evidence of that. It's just my belief that at some point, those more efficient and values-based investment portfolios will have a higher return for the end investor. One, they stay in longer. So if the market's crashing, they're less likely to sell if they care about their investments than if they don't care. Just because you get attached to your values-based portfolio in a way that you don't get attached to your S&P 500. No, you don't actually care about, other than the money you get from it. And so for all those pieces together, I look at sustainability as taking those outside unquantifiable factors or non-financial quantifiable factors and using them as a proxy for better decision making. Because I believe that investing that way is better decision making. Because it avoids short-term profit taking, and short-term profit taking for me is a proxy for bad decision making.
Yeah.
And so that's my weird neurodivergent way of thinking about this whole thing, right? Probably no one else thinks about it that way.
Well, there's parallels to different people that I know that talk about it that way. There's one advisor I know in the Midwest who has lots of farmers as clients, and sustainability is a trigger word for them. It's not a good word. And so he doesn't call it sustainable investing. He says, I think this is somewhat like the way you describe it. He says, when you're running your farm, you're trying to do more with less. You're trying to minimize inputs, right? Maximize outputs, minimize waste. You're trying to run it as efficiently as possible. When we do investing, we try and take cues from the information we can get on companies to find the ones that are doing that, right? Who are trying to run their business in an operationally excellent way, which is usually minimizing inputs, maximizing outputs. And we call that ESG. Right? So he used to do that. I should say he used to say it that way. But now that ESG has been politicized, he calls it responsible investing because ESG is also a trigger word now for
everything's a trigger word these days.
So is that kind of similar to how you would describe it?
Absolutely. Yeah. And I think, it's really funny how politicized this stuff gets, because if you look at kind of if I look at kind of conservatism over decades, right? Theoretically, the values are very aligned.
Yeah.
Right. Use less stuff, be efficient. Don't waste stuff. It's all very capitalistic. It's not, we're not talking about socialism or anything else that they hate.
Yeah.
Right. Now I'm way more socialist than I am capitalist, but so some of that stuff appeals to me anyway, but it should appeal to them too. This should all be very obvious, except that there's a bunch of billionaires who are obviously thinking like short-term profit takers. And so this makes them look bad. And so, of course, it politicizes because money politicizes things.
Well, that's the other part of what you said, which I thought was interesting. It sounds like a strong claim that you made, that investing for your values has higher returns. But the way I reconcile that is the following. If you have a long-term investment horizon, which most advisor clients do, 20 or 30 years, you don't actually want a company to be most profitable over the next 1, 2, or 3 years. You want them to be, really profitable, really successful 20 or 30 years out. And most projects, either a sustainability project, an efficiency project, a human capital project, or some initiative you do at a company, will pencil out over the longer time frames you have. If you have, a 5-year payback period, a lot of projects pencil. If you have a 10-year payback period, most projects pencil. At 15 or 20 years, almost all of them do, right? Because you're making more money at the end of the day. And that's really what sustainability is about. It's like, can you give the manager, the company, enough time, enough rope to make these investments? And unfortunately, I think our current kind of Wall Street dominated investment situation asks for quarterly earnings rather than 20-year success metrics. Right?
Yeah, totally. Well, it's interesting then, if I really kind of take that to the next level, it feels like if you take that thought experiment down the road, the benefits of a private company are that they don't have to think short term. And so sometimes you think, oh, well, private companies will be better over the long term because they don't have all this constantly needing to talk about earnings. And so if a public company is thinking in the sustainability mindset and long term, they start acting more like a private company, which should mean that they start getting more like private company returns.
Well, with the exception of if that private company is in a 7-year fund, right? Then it's
we all know how private equity ruins everything. Except some of my private equity friends. You don't ruin anything. Don't take that as an insult. I love you. Please buy my clients.
So you made an interesting point that you no longer make a strong distinction between what I call the ESG and what we used to call the SRI, which is the ESG was traditionally defined as finding those metrics and variables on companies that lets you gain some insights on their risk and their potential opportunities around these resource spends and resource savings, right? And then SRI is more social responsible investing, was more associated with these are my values. I like this. I don't like that. So you've mashed them together now, or you keep them separate, or how do you think about it?
What I found is that the people who talk about the differences of the different kind of flavors of sustainability or ESG or SRI or values-based investing or ethical, whatever they call it, the only people who actually enjoy that conversation are the wonky, geeky people who are actually doing that work,
You just
right?
told me that because I just asked you that question.
No, we're both the wonky, geeky people around this subject, right? We think about it like, oh yeah, well that's like that, but it's a little bit like when I hang out with my D&D friends and we're talking about the differences between the versions of D&D. They're like, oh no, 4th edition was the worst. Oh no, I love 3rd edition. It's like it's just kind of silly nonsense, right? Because when I talk to clients about it, the actual end investors, my clients, when I would talk to them about what their investment portfolio looked like and some of the options they had around investing, they don't have those same distinctions. Even the ones who are really into it, right? It's not even half my clients were like, "Oh, that sounds cool. Yeah, whatever. Great. I love it." And that's half of the people who are willing to invest. They're like, "Okay, sounds cool. I like it better than not, but I don't need to know anything about it. Thanks. I'm bored." The other half are interested, but even they don't care, right? They're like ESG, whatever. Like, what does it mean?
Yeah.
What is this actually? What's the differences in the investment portfolio? Is it mean that I should have a lower return? Are there higher costs? Are there do we own this company, right? Who I hate, which is that divestment issue is very difficult.
Yeah.
Back early on when we were just launching Align Impact, we differentiated the kinds of investing we could do. Instead of categorizing the flavors, we categorized the methods, which was divest, invest, engage. And all three of those things go from less effective to most effective. And that's how we talked about it with our clients. Divest, don't buy companies you don't like. Right. It's not that effective because all you're doing is just cutting someone out of the room. And that doesn't actually change behavior most of the time. But at least you don't have to invest in it. So you feel better. So that's divestment. Investment. Okay. Tilt your investments toward the people who are actually doing good stuff. So rather than just say, I buy the whole market, but not the bottom 10%, well, tilt it a little bit. Right. And that was the big innovation that Dimensional did back in 2008 when they launched those funds was no, we tilt toward the good companies. We don't cut everyone out. We cut some out. Do some divestment and then some investment, which is more effective because you're theoretically giving a company an incentive to do better. Because if they do better, then you might invest more in them, then their cost of capital goes down. And that's the thesis of that, tilt on investment. And then, of course, the most effective is engagement, right? You go to the company and you loudly proclaim in the shareholders meeting all the things you want, and then you embarrass them into doing the things that are better for everybody. And that's more effective, we've seen with boycotts and shareholder resolutions and all that stuff. And so breaking it down into those factors, my clients totally resonated with. They're like, oh, okay, well, which one are we doing? Like, well, we do a little of each. And here's what we do for this. Here's what we do for that. And here's what we do for that. And they're like, okay, now they understand the actions they're taking as opposed to the geeky flavor of what it looks like in comparison. Right? Does that make sense?
No, it's a really good way of describing it, and probably more clarity arrives to the client than with the ESG SRI impact kind of distinction, right?
Yeah, you won't be eyes glaze over at that point.
Yeah, you won't be surprised to hear, of course, that's with our background at Dimensional that's the way we do things at Vert, and it's a very compelling. It's a very compelling message to people, and people aren't they're not as dumb about this as sometimes people think. Like they actually know that when you don't invest in a company, they know that that's not really impactful, right? Like you divest, like like that. They kind of get that that's not a big thing. And so the way you say that there's more impact the further you go from divest to invest to engage, I think that's consistent with their lived experience
Yeah.
in other
Well,
realms.
I don't know that I'd say it's more impact. I would say it's more effective,
More effective.
and particularly more effective at changing corporate behavior,
Yeah, that's what I meant. Yeah.
right? Because there's other stuff, or that not everything we're doing with sustainable investing is about changing corporate behavior,
Yeah.
right? But the divest, invest, engage for me is purely kind of that metric of things you can do as an investor to potentially make the companies that you're investing in do things differently. So that's what I mean by that.
All right. So let's I think that's a good introduction to what sustainable investing is. Um, let's talk about why advisors might want to offer it or should offer it. So that's the question. Why should they offer a sustainable investing solution to clients?
Well, depends on how far you want to go. So what I found was we were one of the firms that went all in. In fact, in 2009, we made the decision that we wouldn't offer non-sustainable portfolios. So we doubled down on it.
Yeah.
Now, that doesn't mean that every single client who joined us uh, cared about it. I would say fewer than half the clients cared about it, but all of the clients heard about it. We would say, "Hey, this is the portfolio," when we came time to talk about investments, which wasn't our primary discussion. They weren't coming for investments. We were coming for planning, and then we'd talk about the investments. I would say half my clients, I said, "Here's the investment portfolio. It has this, it has that, it has this fund, it has that fund. It's like this." Show them the little one pager. They're like, "Okay, I don't care. Let's talk about if I
Yeah.
can buy that house, because I want to buy that house, please. I don't care about this. This is all nonsense." So half of our clients easily were that.
Yeah.
But almost all of them really liked the idea of investing in a way that um, either they felt strongly about, their spouse felt strongly about, or their kids felt strongly about. So they wanted to do it so they could seem cool to their kids. I had a few of those who were like, "Yeah, I don't care about any of this stuff, but my kids like it. And so I want to do it because then they think I'm the cool dad, or the cool mom or whatever." You know what I mean? So there was some of that. And so by going pretty deep on it, we were able to capture and compete for clients using that as kind of one of our niches, right? And we all know niche marketing is pretty powerful.
Yeah.
And so by doing that and having our advertisements be about making the world better, we captured a lot of the people who kind of vaguely cared about it. And they
Yeah.
came to us. And if they really cared about it, they really came to us.
Yeah.
Because they realized we were doing it, if not better than everyone else, we were doing it in a way that was real or authentic, as you mentioned earlier, right? We were doing our best to be as authentic as possible and focus on outcomes and do it the way that the geeky people around this would do. And when you're doing that, then the people who kind of care about it are also going to want to do that, right? It's like we were talking about coffee earlier, right? If you don't care about, you didn't care as much about good coffee as I do, right? But if we were in London and I said, "Okay, do you want to go to Starbucks? I'm not going to go to Starbucks. Do you want to go to this really good coffee place?" You're like, "Oh, it's really good. Of course I'll go there."
Yeah.
Right? You would rather have good coffee than bad coffee. You're just more tolerant of bad coffee than I am.
Yeah.
Right? I'm like, I'll never do bad coffee. I'm the sustainable person who's like, I won't invest non-sustainably.
Yeah.
You're like, I don't really care how I invest because I'll invest either way. But it's the same price over here and I get sustainability. I'm in, right?
Yeah.
Because the only reason not to is like, oh, it's more expensive. Well, I don't want to pay for that luxury, right?
Yeah.
It's not worth it to me. But if it's the same price, most of the people outside of the politicalization of it all are happy to do it. And so for us, going all in, I say, was a big part of our very high growth rate because we got a lot of people who couldn't go to another advisor. We were the only option.
Yeah.
All my Burning Man friends were going to come to us because where else are they going to go?
Yeah.
Right.
So there's a cohort you're saying of investors out there or prospects or clients who it's a must have. Right.
It's a must have. And you can capture that niche if you're real. and not if you're not
You're
real.
gonna miss those guys if you
Yeah.
don't have it and if you're not talking about it.
Yeah.
There's
And
co
so we went all in, but you don't have to,
Right.
because most of the advisors I talked to, like when I came to London to your thing and people were asking questions, most of the advisors say, yeah, I mean, most of my clients are fine. They don't care.
Yeah.
But, I have these 4 clients
Yeah.
and they are bothering me constantly
Yeah.
about offering this, and I don't have it, and I don't know anything about it,
Yep.
and I'd love to be able to offer them something to keep them happy, but like I also don't want to completely revamp my entire way I operate just for those 3 clients.
So
And
does
so
that
they can add it in, and then those clients are happy, and that's another reason to use it, is to just use as that extra thing that they get.
little tangent here. That cohort, the 4, the squeaky wheels there that want that sustainable investing option, are they better refers? Are they mavens? Are you more likely to find those in that group than elsewhere?
That's interesting. I don't know. Some,
Yeah.
but
It might not be a correlation there. Okay.
I think here's the correlation, is that any individual person is has a certain likelihood of referring to you, right? If I am your client, there's a 100% chance I'm going to refer to you. Guaranteed, because that's who I am. I love connecting people. I
Yeah.
love solving people's problems. And so
Yeah.
if I hear of someone and they're like, yeah, I wish I could invest in more green real estate, I'm like, let me help you,
Yeah.
right? I'm that person. I want to put myself in the middle of that. So I'm a natural referrer. There are other people who will never refer,
Yeah.
period. I don't care how much they love you. You could have literally saved their life 8 times and they'll never tell anyone they know you. It's just because they are uncomfortable with that activity.
Yeah.
Right. So we take that. That's the primary, right? Natural referrers refer anyway. Unnatural referrers are never going to refer. There's some people in the middle.
Yeah.
So if you look at the people in the middle, there's a big chunk of the population that will refer if you have served them well.
Yeah.
Right. These are all the people who write Yelp reviews. Right. You know what I mean? Like I've never written a Yelp
Yeah.
review. Like I'm never going to in my
Yeah.
whole life. It's just not who I am.
Yeah.
Those people write Yelp reviews. They want to judge you. They want to, uh, you know, filter good from bad,
Yeah.
right? And they're very, it feeds them to do that. Those people will refer if you are offering them something that they like, and if they don't have complaints about you. They're only gonna refer to you if you get the 9 out of 10 on the
Yeah.
NPS score or whatever, right? I'll do it even if you're a 2. I'll tell them all the reasons you're a 2, but I'll still refer them there. Like,
Yeah.
well, if you want something like this, it's perfect. It's not very good, but it's great. If you really want a bad hot dog, go here, right? That's the best bad hot dog you can find,
Yeah.
right?
Okay.
And so I think if you do offer that to those 4 people, if they are referrers, they might refer, but they definitely won't refer if you don't offer them that, because they're unhappy in some way.
Okay.
So
Yeah.
maybe a little, but I don't think it's strong.
Okay, so you have the 3 cohorts. You have the must-have, you have the nice to have. It's nice to have sustainable investing, and then you have the can take it or leave it. They don't really care at all.
Yeah.
And within each of those cohorts, there's refers and non-refers, and some that are more likely. Okay.
That's what I believe.
You see this in the statistics. I'm assuming everyone who's listening has seen this. When you ask individual investors whether they're interested in sustainable investing, it's 60% of boomers say they're interested in. Of silent generation say they're interested in. 70% of boomers. 90% of millennials of X, and then 96% of millennials. So the younger generation, and some say the females as well, are more passionate or more interested in sustainable investing. Is that a reason for advisors to do that? Is that something that you see, or is that not something that you see?
Yeah, I don't actually know those stats. That's really interesting. I wonder how interested in translates into actually want.
Yeah.
That's interesting. It would be an interesting stat, like how many actually use that as a decision making criteria.
Well, I'll give you that statistic. The actual number who invested that way in the U.S. is 8%, right? So,
Right.
it's not a lot that have actually been able to translate that, and that's the gap or the opportunity that advisors might have.
Well, and interestingly, like I would love to, because when you look at the actual situation among those populations, how much of that difference between 70% being interested and 8% investing, like almost a 10x, um, how much of that difference is the gatekeepers like advisors or investment managers or anyone else, just not offering it,
Yeah,
right? So like 100% of my clients went into sustainable investing,
yeah,
right? And in a different firm, 100% don't go into sustainable investing. And that's just because that's the opportunity set. And since my clients were coming to me because of my portfolio, they were coming to me because they trusted us to do their planning and trusted us to give them good advice. Like my gatekeeping, where I said you must do it, caused probably most of that 7%. And then the other advisors who just don't have it or don't have the knowledge or experience in it, they tilt their people toward investments that don't have it. I would say the same thing is true with active and passive investing. Most people don't even understand the difference.
yeah,
And so when they go to their advisor, well, they trusted their advisor because they got referred to them.
yeah,
They seem like a nice person. They like them. And so they're going to take their advice. And if that advice is go buy NVIDIA, they're going to do that. And if the advice is go buy Dimensional, they're going to do that because they don't know the difference.
yeah,
And I think that's probably way more true than anything else, is that 70% of the population doesn't have any clue what they're talking about. They think, oh yeah, sustainable investing, that sounds cool, right? And then they go to talk to whoever the advisor is, whoever is offering the solution, and that person says, well, this is what's true, and that's the only research they do, and so they just choose whatever piece of advice they get first.
yeah. So the same, it's Cerulean Associates that had the 8% number. 8% of client monies is invested sustainably from advisors. They also said that 65% of advisors are not talking to their clients about sustainability.
Yeah, sounds about right.
Yeah, yeah,
It's hard to learn, right? I mean, I taught dozens and dozens of advisors who we hired over the years how to have that conversation. And even in a place where it was fully acculturated, every client got it. It was a main part of our sustainability story. Half of them never really
yeah,
kind of got religion and learned it. And that's the advisors, right? They're like, I don't care. There's some of our advisors like, this is dumb. We shouldn't do it. You know what I mean? And they're here at a firm they joined the firm
yeah,
knowing that was true. You know what I mean? So
yeah,
it's it's a wide spectrum. And so if you're just some guy who's running your own practice, which is most of the advisory firms in this country, it's just solos or 2-3 advisor shops, they're like, well, we could spend the next like 300 hours learning how to talk about this, or we could just not care about it because it doesn't really affect our growth.
yeah,
And so I think it's short-sighted on their side. But mostly I think it's short-sighted on the cases of the big tent fund companies, right? Because you go to them, you go to someone like a Fidelity or Schwab or anyone else, and you go, hey, you're investing in private prisons across your portfolio. And they're like, well, we're not doing that in our sustainable funds. And we're like, but you need to take responsibility for the fact that you're investing in legalized slavery. And because that's what happens at these private prisons.
yeah,
And if you're doing that, you are part of the problem. And so it's so much more about, I care more about the corporate responsibility of the investment managers than I do of the underlying investments. The underlying investments are doing their best, right? Even the short-term profit takers want to be efficient. They would rather not pollute if they don't have to. You know what I mean? If it's expensive not to, they may choose to pollute anyway. But most people out there are just trying to do the right thing, and that's fine. I believe that.
yeah,
The investment managers, the gatekeepers, and the people who put this stuff together are thinking in terms of profitability instead of values.
yeah,
They are not thinking about responsibility. They're like, no, we want to give everyone access to all the stuff. And you're like, well, maybe you should have an opinion
yeah,
instead. And because sometimes that's better.
yeah. So let's say an advisor has these cohorts of, or imagines they have these cohorts of, there's a few clients, maybe a third or quarter, whatever it is, that it's a must have. And then there's a third who it's a nice to have, and a third who, don't care. What should they do? Should they go all in like you guys did and say, we're just going to have sustainable portfolios? Should they have a conventional offering and a sustainable offering, and put them in front of people to choose, kind of, normal or organic or what have you? Or should they do full custom? What do you recommend from a business development and a practice management standpoint?
Well, at least start by having an option, see who takes advantage of it. But the problem is a lot of people do that and then they don't have success. Like, oh, no one really cares about it. It's like, well, because neither do you. Have an opinion.
We found that a lot of people who have built the option don't talk about them, right? It's like the Italian restaurant that has the osso buco in the back, but won't tell anyone that they have it unless they're,
unless right? I always get different food when I go to Chinatown with my friends who live in Chinatown, right? The food's different and it's better because they know, they're like, oh, we'll hook you up. You know what I mean? We'll give you the good stuff because, forget me. Like, I'm not going to get good stuff when I walk in there. But if you know what to ask for, then you know what to get. And so, a little savviness on the advisor's part is going to increase their success rate by 1,000,000,000%. Because otherwise it's 0, right? Or maybe an infinite percent because they otherwise wouldn't get anything there. But quite honestly, like if I'm honest with it, it's like have your investment committee actually research what the proper fund is for a really good portfolio and choose that. And if you kind of ignore sustainability and say, well, what is the best in class in this asset class? I think that sometimes the sustainable funds should be that best in class. And if they aren't, that's probably a problem with the investment manager. Then you're asking for concessions from your investors to say, oh, accept a lower return because you care about stuff. Well, what if we didn't? What if we actually created the fund to be better on its face, regardless of sustainability? So once we're there, then we win, right? Yeah. Like every time, if people are being honest, unfortunately, they aren't. Right? The investment committees have bias. Every investment committee has bias, right? No one's really looking at it on the full picture.
So I mentioned this before, that the investment case is quite easily made, but not often made for sustainable investing, because what you just said is the truth. You can actually get a sustainable investment solution in almost every asset class that is going to perform just as well financially as conventional. So that raises the question, why do you even have to talk about this? Why do you even have to, why not just choose that responsible choice over if I can get organic milk for the same price or the same outcome as conventional milk, like why would I go conventional? Right?
You like pesticides? Like what's your damage? You know what I mean? Like you like more pollution, you like whatever, like that's just all silly.
Yeah.
So right. Then it just moves into politics, right? And you're like, well, politics are stupid when it comes to investing. No one should invest from a political lens because it's dumb.
Yeah.
Right. You're going to have a lower return. Right.
Yeah. So we've seen advisors do this in these two different ways. One like you did, where you talked about it, but for a lot of clients it wasn't a big deal. But then we had other ones who just said this is part of our normal process, right? Quite famously, I guess it's not famous. I've tried to make him famous because he was really good at this. He would just say, "Listen, before we take you on as a client, we just want you to we want to set some expectations about our investment." So we know we could be a good fit. We don't do market timing. We don't do stock picking. We don't do fund manager chasing. We take your portfolio, we diversify it, long-term buy and hold. We tilt to small, to value, to international, and to sustainability. And you have to stay with that program. That's all we offer. If you're comfortable with that, let's continue on our dialogue and build you an investment solution. If you want something else, I can refer you to somebody else. And that was the full extent of their sustainability conversation, right? It was dropped it in as kind of like a factor. That was it, right? Is that a way that you is that appealing to you from an advisor perspective?
Yeah. That was half the conversations I had with my clients. The only people I talked to about sustainability with are the people who cared.
Yeah.
right? They're like, if I said that, like, hey, here's our portfolios, they all have some degree of sustainability built into them. So we want to move forward. I think a 60-40 is great for you, right? Like that was the conversation. If they're like, oh, it's sustainable, tell me more. And then I'll go into that conversation when they ask. But like, I barely, I would tell, I mean, my personal clients, this wasn't true of all our advisors, but for me, I sat down with a client in our first meeting and I'd say, okay, let's talk about your values. By the way, I'm happy to talk in detail about our investment solution one time. So whenever you're ready for that, let me know and I'm happy to talk about it. If you never want to talk about it, I never will. Right? Just know it's there. We have an investment committee. It's really good. My money's invested the same way. Do whatever you want. And maybe a couple people were like, yeah, tell me a little bit about because they didn't want to feel stupid. So like, tell me a little bit about the investment thing. And I have my little 5-minute high level speech and I'd say, okay, it's like this, right? Here's the blah, blah, this small value and profitability and sustainability and all the same stuff that every advisor says. 5 minutes. I'm like, is that enough? Or do you want to go deeper? And direct me. Where do you want to go deeper? And none of them ever got to as deep as I could go. Right. They're all like, yeah, I'm good now. Yeah. And then we never ever talked about investments ever again. We talked about their kids. We talked about their vacation plans. We talked about, their new boyfriend or whatever they wanted to talk about. And none of it was about how their investment portfolio did. And so my clients actually liked me because I didn't bore them. And so they stayed with me because I wasn't like, my meeting with me wasn't like going to the dentist, which I think a lot of people feel like their financial advisor conversations are.
All right, so let me try a variation of that. Another advisor we work with says something along the following, because they're all in as well, and they say, listen, we've noticed that a lot of big institutional investors have been integrating ESG metrics into their portfolios. This is their corpus portfolios, and we often look to that institutional community for inspiration on what's coming next. We now have the ability to incorporate some of those things into our portfolio. So we're going ahead and doing that for a risk management perspective. And they just say that. And then they, like, this is the next frontier in investing and we're integrating it now. That same thing, right? Okay.
Yeah, I think that works fine. I mean, for the most part, like really, advisors need to talk about what they believe. And if they talk about what they believe and they feel strongly and they just are able to speak with passion and enthusiasm and confidence, the clients take that as, okay, well, that's what I should do. And so what do you think is the right thing? And if you think what the right thing is and then do the right thing, your clients will like you.
So these are when we talk about your why, we run these boot camps and we encourage advisors to sketch out, you said that 5-minute piece, right? Like, why are you offering sustainable investing? Why are you talking about it? Because really, when you bring up anything, the first question people ask is, why is this person talking to me about this and why now, right? So it's better to answer that question, the why question right now. So there's investment reasons, right? Risk, institutional quality, those types of things. There's the personal passion one, the why that you just described. Like, I have grandkids, or I have kids, or I like fishing or something, or I can't stand this. So we looked into this, and then whatever your personal story is, you're saying that's if they have a personal story that led them to sustainable investing, use that rather than an investment reason or something like
that. Always, right? I mean, that's just general.
Yeah.
That is general advice for everything. Every time you talk to your client about anything, right? Don't tell them about the details and don't try and convince them with logic. Tell them stories.
Yeah.
People respond well to stories. We evolved as a group that sits around the fire telling each other stories. That was our entire, 100,000 million year history or whatever. As soon as we had language, the first thing we did was like, whoa, I got to tell you about this crazy mammoth. You know what I mean? Like, did you see what it did? You know what I mean? Or usually naughty tales, right? Those are the key ones. You get a little technology and everyone just wants to tell stories with it.
Yeah.
And so, obviously tell stories. If you have a personal story about this, tell that personal story. If you don't have a personal story with it, you do. You just do. And like everyone has a personal story about anything. And any advisor, if you want to enhance your skill set on anything, but particularly sales and client service and the way you interact with your clients, go take an improv class, go take a theater class, go take a creative writing class, go take anything where you learn to do better storytelling.
That's a great idea. There's larger firms, right, where advisors sit in larger firms and they're forced to use the options that the larger firm has, right? They have conventional, they have the sustainable on the side. And one of the advisors we work with said, I used to tell everyone that we have these options, the conventional and the sustainable, and you can choose. This is the words that come out of his mouth when he's talking to clients, prospects. He says, but since I've been working here, the sustainable funds have done just as well as the conventional funds. So I don't understand why we're still offering both of them. So that's my, and of course, that's really not a personal passion story about why sustainability, but it's an honest like reveal, right? That is a story that resonates with clients.
It's the weirdest thing, actually. As you said that, it made me realize I can't think of another area in financial planning where we just ask the client their preference. I don't give my client, 4 different life insurance policies and say, well, which one appeals to you most? Right? It's your choice. I would never say that. If I did, they get fired. Right? There's certain things, obviously, I want to check in on their values, but I always come back with a recommendation. This is what I think you should do.
No,
right?
Your
So,
advice.
what are you doing? Right? Like, what are you doing? Like, why are you asking them their preference? All of a sudden, like, you suddenly go and put all the thinking back on your client who came to you for advice, and you're not giving him any because you don't want to insert your own preferences into their life, where literally every other aspect, you don't ask them their questions about what tax assumptions you should make. You don't ask them about what insurance assumptions you should make. You don't ask them about a lot of the estate planning, tax avoidance. You don't ask them these things because you know the right answer for them. And there is a right answer for them around sustainability and whether or not they should be invested in a particular fund. There is a right answer for them, in your opinion. And for you to then just put your hands up and say, no, I'm not going to tell you what I think, is a dereliction of duty as an advisor. Right. And it's silly. And why do we give them that choice when we don't give them that choice anywhere else, anywhere? And it's because they don't trust it. They don't understand it. And so they're like, well, I know they want it, but I don't really understand it. So I can't give my honest advice. But if that were true about if an advisor came to me and says, I don't offer this kind of life insurance because I don't understand it, so I don't want to tell my clients about it, I would never refer any client to them ever. Like, what, you don't want to go learn about something because you don't want to be bothered? And so what if it's right for your client? What is the matter with you? Right? That's just nonsense. Now, to be fair, I don't know anything about annuities, right? Or like permanent life insurance, but someone in my firm does, right? Or someone somewhere does. And I need to have that ability to have that conversation with the client. And so I would always have, if my client came in with an annuity and I needed to review it, I would phone a friend. I'd say, hey, Brian, can you pop into this meeting? Because my client has questions about annuities. And as you know, I don't know anything about annuities. And so Brian would come in, explain what was going on, offer his advice, and then I would move on. And if you're at a solo firm, you can still have that. You just have to have it be outsourced, and you have someone that can join your meetings with you. And so that's incumbent upon every advisor to at least understand enough that they can offer an honest and knowledgeable piece of advice around something that's really important to everyone, right? Even if they don't want to invest that way, it's still important that they understand what their options are. Even if you're going to, not give advice, you need to be able to offer them, a full set of options. So I don't understand that, like, just opting out. Well, that's just, you're not serving your clients well if you're not actually incorporating this piece of knowledge and this piece of advice. And you may not want to do it. That's fine. If you look at it and think, oh no, it's not right for my clients. My clients wouldn't like it. They don't want it. If I bring it up to them, all the politicization of it is hard. It makes them mad at me if I bring it up. My client base hates it, so doesn't want it. Fine. Then great. You've looked at it. You've decided if it's right for your clients. You said, look, in no circumstance was my group of clients ever going to be interested or want it or need it. Then you don't do it. Just like I didn't tell my clients to ever invest in permanent life insurance because we looked at it and said, we just don't see the use case for it. But we still looked at it. In investing, we always looked at commodities. We always looked at every asset class, even if we chose not to include it. But we did the analysis, and we did it for real, not from a values perspective.
Yeah. All right, well, that kind of brings up a question: is how do advisors get more? Who's the friend that they phone in this case? I mean, we offer that service to the advisors we work with, or anyone. If you want to learn more about sustainable investing, just give us a call or send us an email, and we will be that friend and help you with this as part of our mission, what we do. But more generally, where would you recommend advisors go?
Yeah, I mean, the investment managers who know this stuff are always great. So 1-800 call Sam is a great solution. You know, and honestly, you know better than I do. There's so much explosion out there that of, you know, people who are able to speak about this. I mean, back in the day in 2008, there were probably 5 people that advisors go to talk about this. Now there's hundreds, right? Ask ChatGPT, quite honestly. It probably has just as good advice as anyone else, probably better. You know what I mean? Because I'm not saying, you know, AI doesn't have bias, right? But it at least has the collective amount of information that it needs. And I think sustainable investing inherently has a lot of bias embedded in the community, right? The people who are offering it usually are offering it and doing it because they thought deeply about it and went, yeah, this is important to me. You didn't start your firm to do sustainable real estate because you didn't care about sustainable real estate. You're like, wow, that's really cool stuff. I care about it and I want to have more of it in the world, right? Like, so the people who are creating this stuff have embedded bias that is way deeper than anything that AI is going to have around bias. At least then it's kind of a representative sample of humankind. So it has human bias, but not necessarily,
Well,
you know, enthusiastic bias.
This is tangent now, but since we brought it up earlier, we wanted to talk about authenticity. This is probably a good point to bring that up. This is one of our litmus tests when we're helping advisors figure out which fund managers to work with. Call them up and ask them questions. And if they're good at answering your questions, right? If they have knowledge about this stuff, that's an authenticity test. They say, okay, these guys actually know what we're talking about. If they can't answer your questions, right, then it's probably the case that they are doing it for asset gathering reasons rather than being authentic. So,
you know, I'll turn that question around to you a little bit, actually. You know, as I'm thinking about some advisor sitting somewhere in, you know, a solo shop in New Mexico or whatever, you know what I mean? That not a lot of resources. If you're a fee-only firm, NAPFA has a set of questions that you can give to clients and say, this is what you should carry. This is what you should ask an advisor, right? Is there a checklist of things that if you are interested in doing due diligence around investments and sustainability that they could go to and just have a standard set of questions that they should be asking to these investment managers? Where do they get that? Where is that?
We have that list. We have a framework.
Is it on your website? Can people just download it?
No, they can't actually. It should be though.
Yeah, get on it. All right. So whoever's listening, if you work at Vert, go and put that on the internet right now. Post it to you post it to LinkedIn and I'll share it. And then all my LinkedIn people will then be able to say what that is. But it's that kind of stuff, that those resources is what's key, right? Creating those kind of standardized due diligence questions, because I use that all the time. I mean, I have, you know, I do a lot of work now in M&A with my clients. They're either looking to buy or sell firms because it's so big right now. And maybe one of the biggest questions that they come to me with is, oh, hey, I want to do due diligence on this firm I'm thinking about acquiring. Do you have a standard due diligence list of questions I should be asking?
Yeah.
Right. And because they don't know what should the biggest issue with people implementing sustainability is that they don't know what questions to ask. It's not that they're not smart enough to review the answers. They are. They just don't know what they should ask because they don't know what they don't know. Right. And so we'll popularize Sam's list. And if you know, anyone in the comments on YouTube here want to post in like, oh no, I love this list, please share resources with each other.
Yeah.
It's so much more important for people in this space, in the advisor space in general, to share resources around this so that all of us can get more educated, because we're already doing that with everything else, all of our study groups, all of our stuff. But having those things being that standard list, like the NAPFA questionnaire that
Yeah.
I would give to my clients actually, or my prospects as I'm trying to close a client. I'm like, hey, here's the NAPFA checklist. This is a fee only checklist. You should ask this of any advisor you work with. Here's our pre-prepared answers for it.
Yeah.
Right. And that actually created a lot of confidence in them, because then they'd take that list and go to other people and they'd compare those answers to mine. And then, of course, I usually would win because they're the ones who trust me most, because I told them what to ask other people.
Yeah.
Right. And honestly, if you ever tell someone, hey, don't necessarily use us by default, right? I know you like us and that's cool, but I want you to talk to 2 more people and make sure you're making the right choice.
Yeah.
They're almost always going to choose you because you're going to be the most trustable person, because you made sure that they talked to someone else to get knowledge. And those other people that they talk to are not going to say that, because it's very rare.
Yeah.
And so if you're the one publishing the list of questions, you get to have the first crack at answering them, and and you now set the standard. So not only give them the list of questions on your website, but also the answers for your firm. 2 different files though, because you don't want them to send that list to the other company with all your answers embedded in it already, right? They can always go download it themselves, but
ChatGPT is going to take that and fill it in for other people. No, that's
actually a good kind of, I don't know what they're calling that. It used to be SEO for search engine optimization. What do they call it for ChatGPT or LLM?
It's the AI version of that, right? Like
exactly. Get your stuff out there so it'll know.
Come up in the search. You want to come up in the Gemini, right? Yeah. So
yeah, exactly. So there you go. Put it out there, and those resources. It's funny because you asked me about that, and I don't always know, because like, what was my resource? Well, my firm was my resource.
Yeah.
Right. I didn't have to go look outside of my firm because all the experts were right there working right next to me. Yeah. And so we would be the ones publishing for other people. They would come to us to ask how this should be done. And so I wish I had better resources for you, but I just don't.
Yeah, exactly. Exactly. Yeah. All right. So let's switch gears a little bit to how advisors can use sustainable investing to grow your business. You guys use we talked about the niche marketing, the community marketing, if you want to call it that. If you have some kind of a niche, the paths to grow your business become somewhat obvious. Can you tell us what you did with this at your firm?
Yeah, we had a lot. Interestingly, we had a marketing channel that I don't recommend for anyone. It was very, lucky on some level that we were doing it. We advertised on the back of print Buddhist magazines, and that one advertisement got so many clients. We also tried advertising in yoga magazines, nothing. We tried advertising in other Buddhist magazines, nothing. We tried having a booth at yoga conferences, and we got 1 client, right? We tried all this other stuff that was similar to this one magazine. It just didn't work. And the reason it didn't work is because the one that worked was a magazine that people tended to keep and collect. Right. So like, National Geographic back in the old days where people would have like a bunch of them. And so the latest issue was like, it was like a coffee table magazine, as opposed to like, Rolling Stone, where you get it and then you throw it away. Right. Or whatever magazines. And no one reads magazines anymore. Except this one is still fairly high population. The circulation was like 90% LA, San Francisco, New York. So very urban. So like urban Buddhists have a lot of money in general. Just on average, they tend to be wealthier compared to the general population. And because we were on the back cover, there was a 50% chance that at any given time on their coffee table, our ad was the thing facing up. Right? Because you put it down, you either put it down on its back or front. And so if you put it down on its front, you're staring at our picture of a big giant sequoia saying like, green investing is the right way, or whatever, our slogan was at the time. It wasn't that. That's horrible. But we'd have these ads and we'd change them every 2-3 months. And so they constantly get this picture. And we were there for years on this magazine. Okay. And it was, hundreds of millions of dollars in assets came from that one ad.
Wow.
Right. Wow. And we mentioned before referring. Obviously, referring is easier because your hippie friends are like, "Oh, you got to talk to those people."
Yeah.
I had I had 2 for my own kind of sales activities. I had 2 main channels. One was other advisors. because we had a small client solution and they didn't, so they'd refer us people, even if they weren't small. We got a lot of referrals from other advisors. I personally did, because I was out there in the world trying to buy firms, and so they all, knew me, so they would send clients over to me if they didn't want them, right? Especially the niche firms, right? They have their own niche, and so they send me anyone who's not in their niche. I cleaned up from other advisors, right? So many referrals. The other one was a lot of my friends are like, Burning Man hippie types, right? It's just how I grew up. These are all my friends. My dad was a hippie. My friends are all hippies, and they're all just off there at festivals having a great time, right, with their lives. And lots of them have plenty of money. Lots of them have some money. And they didn't have a whole lot of options. And so when my friends are out there at their Burning Man prep session or whatever, and someone's like, "Oh man, I just inherited some money and I don't know what to do with it," then my friend is like, "Hey, you got to talk to JD, because he's not like other financial advisors." Right? He's not like, picture a financial advisor. That's not them. Right? They're different. And so that I was the only referral. They weren't like, "Oh, here's a few that I know." That's just that whole community would come talk to me. And is that because we offered sustainable investing? Kinda, right? But it was more around the fact that we were someone that wouldn't laugh at their lifestyle.
Sympathetic.
We were willing to accept them. And the fact that we offered sustainable investing was social proof that that was true. Right. And so in some level, like, social proof is really important in sales, right? And we all know that, or you may not have heard that term before, but you know it conceptually, that you can say something and your prospects or your potential customers aren't going to necessarily believe it. They're going to start looking for other things that tell them that it's true, because they're skeptical about what you say, because why, you have a vested interest in them believing something true. But if they can then go and say, "Oh, here are some client testimonials. Here is, oh, you're a B Corp, right? Oh, I can see that's some social proof that what you're saying is true. Oh, all of your investments are sustainable."
So
that's social proof.
You're saying values identification isn't enough. Like, there's a statement that you make that you're into sustainability and they're into sustainability, so there's a connection there. But they're actually they're gonna check. They don't want to see it on your website. They're gonna want to see some articles you wrote, or you on
or anything. Right, about your firm. And like I said, those prospects weren't coming to me because they cared about sustainable investing. They did, but that's not why they came to me. They came to me because they had financial problems. And they chose me because they knew that I accepted their lifestyle. Right. And as proof that I accepted their lifestyle, they said, "Oh, well, they're all sustainable investing." So that means they're probably closer to my value set than someone else who doesn't offer that. Right. And so the sustainable investing is irrelevant to their decision making. The fact that I offer it is proof that when they come to me and say, "Hey, I'm polyamorous and I need you to find an estate attorney who's not going to put an infidelity clause in my estate documents," which is a real story of a real prospect, or a real client I had. And they knew that they could talk to me about that. And part of the reason was because they knew the community that I worked with. They knew who I was because I talk about who I am and what my values are. They know who my family is. They know that our firm offers sustainable investing, that our firm has, very progressive employee benefits. I put our employee handbook on our website for anyone to download, because I wrote it in such a way that it indicated to people the social proof of who we were inside. And that was important to them. They want people who match their values. And so I showed them what my values were. And one of those indicators is the sustainability.
I want to come back to that part in the B Corp thing and all that, and how that influenced your growth and marketing. But before we go that, you mentioned something earlier about advisor referrals. We've seen this before at larger firms, where one advisor in the group of 20 or 50 or 100 advisors is passionate about sustainable investing, and their business development accidentally ends up being the other advisors who are like, "Oh, Sally's the expert in this. I don't want to deal with this client. I'm just going to send it to Sally."
100%.
Okay. And you could do that even as a solo firm. If you were in, say, a community of advisors that you were known as that. right? Because you
Oh,
said
absolutely.
you did that
100%.
as a small firm. You guys had that small firm solution, and that was a driver of that. Okay.
Yep. Yeah, anything you're doing that other people don't is going to increase referrals from your professional friends if you network and do that sort of stuff. And it's honestly, it's probably easier to get speaking slots at conferences or whatever else on sustainability than on non-sustainability.
Yeah.
Right? If you come across as an expert in that, or you come across as even interested in that,
Yeah.
there's going to be opportunities to speak, and there's just not that many people who are willing to speak on it,
Yeah.
right? And put themselves out there as the expert. And so it's the tighter that it's like any niche, right? The tighter you get the niche, the fewer people are in it, the more likely you are to get those referrals. I'm not a huge believer in niche marketing, right? I actually, I steer a lot of my clients that I'm consulting with away from niches, right? Or at least some
Yeah.
kinds of niches, because it's both an accelerator of growth, but it also caps your growth, right? And now sustainable investing, I don't feel like is a niche because it's too big, right? So it's more an area of focus or something.
Well, there's a distinction between the normal or the conventional definition of a niche is narrow and deep, right? You need to go deep so that you connect with that person's problem or passion or whatever it is. Um, but sustainability isn't really narrow, right? These aren't retiring dentists in Poughkeepsie. This is a lot of people care about people and planet. Like it's a very broad niche, but there's a depth to the passion.
It's like people who say that they have a niche of working with women. You're
Yeah.
like, oh yeah, 50% of the population is. Come on, like, give me a break, right? All you're saying is, I'm not an asshole. You know
Yeah.
what I mean? Like, you know what I mean? Like,
I'm
I
gonna
actually
need
talked to the woman in the meeting. Like what?
I'm gonna need a proof statement on that. Okay, that's
Yeah. So
um,
it's yeah, it's but the fact that it's been politicized, and right now, especially because it has all the headwinds kind of politically that have slowed down a lot of the people's interest in investing that way, which I definitely want to talk about, kind of what the current, how easy it was 10 years ago versus now. You know what I mean? Like, I want to hear more about that from your perspective, because I don't know. But yeah, I don't know, lost my train of thought, but it's all
well,
that.
let's do that because I want to come back to the practice management and the B Corp, but let's do the political thing. Um, listen, it's always been difficult for advisors to talk about sustainable investing because I think there's a perception, and I'd like to hear your perspective on this, that if you're going to talk about sustainable investing, you have to be good and comprehensive about talking about sustainability, right? And my favorite example of this is I still don't know which is better, paper or plastic, right? Like I mean,
Me neither.
the answer is neither, right? Bring your own bag, but still, like,
Right? Yeah.
none of us are an expert on sustainability. Is nuclear a good idea or a bad idea? I mean, come on, like these are hard questions, right? That a lot of really intelligent people are struggling with. So I think just initially people are like, if I have to be able to talk at length with that, and remembering that clients are sometimes coming to the table with some expertise in some area, like they really know a lot about charter schools or about whatever. And so it's scary, right? And my response to that is advisors like, you don't need to know anything about sustainability. You need to know something about investing, right? And you need to know about the parameters at which anything you tilt to, whether it's international or small or value or whatever, or bonds or equities, disrupts their financial plan, right? Like you need to know that level, and you can do that with sustainability. You know how far to push it and not. Those are investment questions, not sustainability questions.
Exactly.
That's what I point out to them. But I think that it's gotten the people like your firm who've been talking about this for a long time are having no problem, and in fact having more opportunities now because they can talk about it, and there's still a lot of people who are interested in it, and sometimes there's even more people interested in it. There's the Trump bump 1.0 in 2017, 2018. More money flowed into sustainable investing than ever before, partially as a response to that.
Right.
Like
all the people who bought guns when Biden got elected, same kind of.
Yeah, there's a response.
Mm-hmm.
but the interest from advisors who were like, I never was very comfortable with that. I never really figured it out. Like they're not really like, that was always the fifth
Like,
or sixth.
I don't have to talk about it anymore.
It was like one of the things on the lower down on their to-do list, and now it's like not on their to-do list, right? To learn how to do that. Yeah. Yeah.
Yeah, no, so I mean, do you feel like people are shying away more from the conversation than they were, in
Absolutely.
2015?
Absolutely. So, and that's a shame, right? So we've heard stories of advisors who've always offered both, right? Or they've talked about it more, and there's been a couple visceral reactions from their clients who are like, "Don't bring that ESG stuff into my house," or like, "I don't want to hear about that." And then they're like, "Okay, next time I don't want to bring that up," right? And that's a real shame because you're going to lose all the benefits of actually having that sustainable offering if you're not showing it on your website. I mean, because when you look at it, there's really easy solutions to that, right? You just say like, listen, we don't invest politically. That's an unsuccessful way of investing. So we do not invest that way. This has nothing to do with politics. Okay, this is about investing in companies, like use your words, JD, that are getting more from less. That's all it is. And then you can diffuse the conversation quickly. But the shame of it is that not a lot of advisors have those a couple of quick sound bites or tools to respond to those situations.
Yeah, and so learning the scripts is actually kind of important.
Yeah.
I had one that I would use for when I got a really geeky client, like who really just wanted to get into the details and like debate it on some level. And they're like, "Well, there's no higher return from it, so why would we do it? Like if it's the same return, like why are we spending the extra 5-10 basis points or whatever to invest this way?" And so then I take them through a thought experiment, which I'm curious to hear what you think about because I'm kind of just making stuff up, but like at the same time, it sounds smart. And if it sounds smart, sometimes it is. So what I would say is, look, do you know what an unpriced externality is? And they're like, no. I'm like, well, it's like usage of things like air, water, how much you pollute. It's things that you can do that don't have a cost, but theoretically might have a cost, right? That you're actually using a resource and using something up that you're not getting charged for. They're like, oh, okay, yeah, I get all that. I'm like, okay, cool. So, do you remember when Walmart demanded that their entire supply chain start using a particular kind of light bulb? And they're like, "Oh, no, I don't remember that." And so I'd go pull up whatever. I don't remember the details of it all, but I'd have that and be like, "Okay, so Walmart decided one day that this is the only thing they're going to offer." And so all of the companies that already offered that particular product did really, really well and were able to increase sales significantly. Right. And the ones that didn't offer that product stopped being able to sell to Walmart, and it was a disaster for their business. Right. This can happen with anything, anytime you have anyone with outsized power in the marketplace. Walmart, US government, China, right? If they decide that they want to start pricing something that was previously unpriced, then anyone who is being efficient with that unpriced thing will do good at that time, and they will have a huge increase in their stock price overnight. Right? If they start mandating carbon credits, if they start mandating pricing of your water use, if they start charging you for other kinds of pollution, right? Anyone who is already set up to accept those externalities going from unpriced to priced will have a huge stock price increase. And if you are invested in them now, you will take advantage of that stock price increase. And it'll be one time, it'll be sudden, and it won't happen again. It's not going to be a steady increase. It's going to be suddenly one company goes pink and another company goes pink.
Yeah.
And do you want to be tilted toward the companies that are already trying to use fewer unpriced externalities to be efficient? Or do you want to be part of the company that doesn't care and isn't offering that stuff?
Yeah.
And they go, oh, yeah. Like, I don't know when that might happen. I don't know when China is going to suddenly say, we don't buy from anyone who doesn't do this. I don't know when Walmart's going to say, we only sell organic produce. But as soon as they do, you don't have time to catch up. They don't give people notice.
Yeah.
So what do you want to do? And they're like, oh, and it's the same return right now. I'm like, yeah, it's the same return right now. And this one might, if that happens, we don't know. But if that happens, this one will do really well. Yep. Oh, yeah. No, that sounds really cool. I'll do that then.
Yeah.
because it doesn't cost me anything today, but I have this potential theoretical bump. What do you think of that story? Because it has nothing to do with politics or values.
Well, the reason that our thesis for sustainable investing is pricing externalities. I said at the beginning that we don't do this, like the goodness of our hearts is our catalyst, but it's not what's going to get companies to change. What's going to get companies to change is they realize they have a cost or a risk that's coming down the pike at some point, and it's better to try and measure that now than later, right? And so we think if you get more money in sustainable investing, we're going to force pricing of these externalities more rapidly, because companies will be paying attention to them, and then standards and frameworks will be developed, and that information will be disclosed in the marketplace. A little less, the way that we try and get that point across is a little less in the weeds the way you did, because we find that that person that appreciates that conversation they're not rare. There are a lot of people who really like that conversation, but it's easier to tell a case study or a story, right?
Sure.
And so we will use real estate stories because real estate is very tangible, and you can say something like the Walmart story, right, which is very tangible, and you can say something like, there's New York passed this law that said if you don't reduce the carbon footprint of your building by 2030, 2035, 2040, we're going to fine you a couple $1 million. There's companies that have already done that. They've already reduced the emissions of their buildings, and they're not facing any fines. And there's a bunch of companies who are now playing catch up, and they have to retrofit their building. They have to move people out of the building, not collect rent for a while they do the they have to do the renovation. And so there's extra costs to these firms that haven't prepared.
Yep.
There's a lot of stories around climate risk that we use around this. We said there's one big storage real estate company that is no longer investing in Florida because the risks are too high. And then there's another big one that doesn't seem to look at those types of things and factor them in, right? Like these are the types of stories that we use to get that across.
Yeah. Why haven't more states? I'm amazed Washington, for example, hasn't changed their property tax so that LEED certified buildings pay less.
Brilliant idea.
Right? Why haven't, of any state that's going to do it, it's going to be Washington, because there's that state government. They're just whack jobs, right? They'll do anything. They're like, oh, we're going to, long-term care insurance. Sure. We'll just launch that for our whole state. Right. And they're certainly willing to do things that other states aren't willing to do, even California and Massachusetts, you would expect to be crazy as well. But Washington will do anything. I'm so amazed they haven't done something like that yet.
And then go maybe it's because you go across the border to British Columbia, and those guys they are doing everything. They're not willing.
Right. Yeah, exactly.
Are doing it, right? Like, so yeah. So let's talk about kind of the practice management aspects of being a responsible or sustainable business. You ran that company, Abacus, as a responsible business first and foremost. Was that just because you thought it was the right thing to do? Did you do the cost benefit analysis and say this is what's going to make sense and it's going to be a competitive value add? How did you come to that decision?
That wasn't me. That was certainly our founders who started the business and wanted that from the very beginning. That's who our founders were, right? They're like, no, we're going to do this. And in fact, in very early on, when B Corp was starting, it started in Philadelphia, and we had an office in Philadelphia. And so one of our partners met with the founder of B Corp. His name is Jay Cohen, I think, maybe. Anyway, he came in and said, hey, there's this cool organization. They are coming in. It's going to be like kind of the Better Business Bureau, but for social companies. They're going to be like a certification for how good of a company we are. I'm like, that sounds really cool, but it's the stupidest thing I've ever heard. Like, it's never going to take off. And in fact, we had two companies at the time, and the larger company that I didn't run decided to do it. And my little subculture, I'm like, I don't have the time for this, right? I don't have time to fill out this like 90-page questionnaire, right? I'm just not going to do it. So the big company became B Corp certified, and my little subsidiary didn't. We ended up merging my little company into the larger one. So we ended up becoming we were part of the founding B Corp story, but I thought it was so stupid. And it's probably the wrongest I've ever been about anything in my entire career. I've been spectacularly wrong many times, right? This is probably the one where the level of stupid that I thought it was versus how it succeeded is the widest gap of any other prediction I've ever made in my whole career. Because
Yeah.
obviously it has taken off in a way that I don't even think they predicted, right? No one knew it was going to take off as much as it has. It's global. It went crazy. It was hit at just the right time, right as Obama was starting. It was just perfect storm. But I thought it was so stupid. But of course, it took about a year for me to look at it and go, oh, well, it's actually okay. People are doing it. And then I became the biggest B Corp geek in the entire world, right? There's no one who's as enthusiastic as a convert. You know what I mean? Like, because I didn't get it. I liked the being a responsible business and having all the cool policies and all that other stuff. Like, that's definitely who I am just in general, right? But I just thought that certification was dumb.
Yeah.
That said, it wasn't. We got lots of clients from it. We got employees from it. We probably in our M&A activity, at least a couple of the people said yes because we were a B Corp. It was the best social proof of our kind of progressive, nature of anything else, right? And I give a lot of credit for some of our growth to being a B Corp and their success at communicating that. And I hung out with a lot of B Corps, and half of them are not real. You know what I mean? They're like, okay, yeah, you're a B Corp, but like you kind of got to the 80 points barely and then never did anything to improve your business. You just like it because it's a cool thing to put on your website. Right. So there's plenty of those people in that community, but I wanted to not just be a B Corp. I wanted to be always on the best of list. So I actually used their checklist as my roadmap for improving my businesses. All right. I went in, I'm like, I looked at it, I rank ordered. I'm like, okay, rank every single question that I didn't get full points for on easy to implement and number of points I could get. Right. I'm a gamer, right? I love games. I will play games all day long. And I turned it into a game for myself. And so we got a ludicrous amount of points. And we're consistently in the best of B Corp lists, in various categories or in the full, and that's like the top 10% of points. So it was great.
So let me ask you a question about the proof point there. A lot of your clients probably know what a B Corp were, right? The Burning Man ones, but then there's others that probably never heard of it. Was it still valuable to the ones who hadn't heard of it? And the minute that you describe what it is or they see it?
Some yes, and some not, right? If you didn't care about it, you didn't care about it. But if you did care about it, if you cared about the things around it but didn't know what B Corp was, and then you saw we were B Corp, and then you clicked on the link, and it's like, this is why, right? And they could go look at our scorecard and see all the things we're doing, and they're like, oh, that's really cool. And they might come in and they don't care about sustainability, and then B Corp they've never heard of, and they click on B Corp and they see that we had a 6-month parental leave policy for both, for both parents, right? Not just the birthing parent. And they saw that and went, oh, that's really cool. Because they didn't care about sustainability, they didn't care about anything, but they saw that we treated, our new moms well. They saw the fact that we had a nursing room with an industrial breast pump in there. They saw that we had credits for this. They saw that we had this policy. They saw we had that policy. And it's the individual things, because I don't know everything they care about, right? But something they care about is on the B Corp list. Right. And so it's just
would you attribute if you had to more of Abacus's success to the B Corp part or the sustainable investing part?
I don't know that I could separate it, because it's all just part of the same thing, right? It's just who we were. I credit it to being authentically who we were, and I use that term authentic again that you brought up very early in our conversation. We just wanted to tell people who we were. We didn't want to lie about it. We wanted it to be real. We didn't pretend to be something we weren't. We just told people who we were really loudly, and I was really proud of who we were. And so it was very easy to be loud about who we were and how cool that was. And look, I got hate mail, you know what I mean? From both sides of the political aisle. People just thought we were irresponsible for offering some of this stuff, right? One time when the Occupy Wall Street was going on, remember those Buddhist ads? One of our ads, showed a picture of like, the people fighting or whatever, and the ad was, "How would Buddha occupy Wall Street?" And then we think he'd be like this, and he'd calmly talk. And like the actual text we were using was fine, right? It wasn't offensive. But oh man, people got mad about that one, right? They're like, "You're taking advantage of these protests to try and do corporate capitalism and blah." They were really mad about it, right? Because we were never like, if you look on the scale of like, the super, capitalist firms to the like, some of the firms out there that you're like, how do you even run your business? Like, you're way on the edge here, and that's a lot. Like, we were never a 10 on that scale, right? We were always maybe a 7 or an 8, right? We were fairly big tent. We accepted other things. We were who we were, and we were loud about it. But like, we were never like, the we were never on that all the way over there.
No,
right?
it's we run the gamut in the advisor space of having the pure capitalist advisors as clients, and then the pure let's say the social warriors, the
evangelists, let's
the
call it.
evangelists, the hippy dippy trippies.
Yeah.
And actually, one of the reasons why we wanted to start the Vert was because Sarah and I were at a conference, this conference over here, for the most socially responsible, and there was a couple hundred advisors in this room, and we realized throughout the course of the 2 days that not a single one of them believed in asset pricing. Like, they all believed in climate change, right? That's been proven, but they still believe that you could pick stocks and generate alpha by, picking renewable energy companies or something. I was like, wow, we need to create a more joined up investment philosophy,
a little bit more practical than just your values. Because look, like, investing to your values, as I mentioned earlier, will keep you invested in the market when things get hard. And of all the things that are going to increase your return, it's stay in the market when things get hard. Right? That's proven. We know those studies. If you sell out at the wrong time and buy in at the wrong time, you're going to lose. And in general, if you ever try and time the market, you're going to lose. And so values matching keeps you in your portfolio, right? It's an emotional sticking point, right? Just like having an advisor keeps you in the market, because you have to call someone to change it as opposed to just pressing a button. So it makes you pause, right? Which is the best thing to do.
That is one of the strongest parts of the sustainable investing research, is that stickiness of the asset for the socially responsible investor. And we like to point out to advisors, like, anything that helps your client stay in their seat is a huge win for your business. And so this might be a reason alone to do that. If you get any more discipline out of your clients because they're more attached to their sustainable portfolios than their conventional portfolios, it's a big win.
And what if only 1 out of 50 clients stays in the market because of that? That's worth it.
That's a win.
Like, it's fully worth it to do that, even if the impact is that small.
One more B Corp question. To what extent, because this is kind of how we did a B Corp certification early. Sarah has helped a bunch of advisors go through their B Corp certification. For us, we kind of take it as a, like, you have kind of a must have in the space that we operate in. But now we use the certification system as almost a complete coverage check. Like I don't want to drop anything out of being a good steward and being a good company and everything like that. And so as long as I go through everything on this list, I'm making improvements and I'm ticking boxes. Was it that for you, or were you gaming it more to win the higher points? Because you said you were a gamer and you want to do the higher points.
Look, it's a little column A, a little column B. Put your hands together, and we got a nice sandwich. You know what I mean? Yeah. Look, I find leveling up and point systems very motivating. Right. And so it got me into the game. And so it kept me interested, because I'm fully ADHD. Like, I'm not going to stay interested unless there's something to win. You know what I mean? And so I did want to win. Right. I did like that. And I think it's part of B Corp's genius in what they created, was that they created that mentality. And so it actually causes behavior change with these firms. And that's really good. But other things do that too, and that advisors use. And this is just one more tool. So, like, I know EOS is very, very popular among advisors these days in terms of it being an operating system to run your business. And I looked at the B Corp checklist as like the same kind of thing. It's an operating system to improve your corporate policies so that they're more friendly to our communities, either to your employees, the earth, whatever it is. Nothing that they're giving you points for makes anything worse. And this is like when you get down to the political debate about any of this stuff, it's like, look, if you do these things, what has happened that is bad, right? Other than your fear that your profits will lower a little bit. Which I don't think is true, but they think is true. So even if you accept that, okay, yeah, it might cost you a little bit to do some of these things, but the actual impact of the things, do any of them make your company worse? And of course you can't say they do. They never do, because they wouldn't put it on the list if it had the risk of making your company worse.
Okay,
right?
I gotta tell a JD story. So I was at one of the dimensional conferences, and I can't remember when it exactly was, when I was still there. So it was 2010, maybe 2012. I'm not exactly sure. And it was Dave DeVoe who's doing a presentation on the value of your business, maximizing the value of your business, and everything. And so he said, okay, I want everyone there's about 100 advisors in the room. I want all the advisors in the room to raise their hand if they've done the following thing in their business to prepare it for succession, for sale, for all these different valuations. And he said, I'm going to start with the easiest stuff and go to the hardest stuff. And so he said, have you, got a portfolio management system or something? And everyone raised their hand. And it's the next question. Everyone's hand still stays up, right? Question 3, a couple of hands go down. Question 4, a couple more hands go down. Question 5, a couple more hands down. After like question 6, okay, all the hands in the room are down except for you and Brent's, and you guys are holding your hands up. And then there's like 6 more questions, and they're like, do you have an employee stock ownership program? The hands still up. Do you give blah, 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 blah. And these were not like, are you a nice person questions. These are like, have you increased the value of your business by doing this thing, right? And the way you were talking right there just remind me of that. You did all those things, maybe not explicitly to increase the value of your business, but by doing the right thing, you had done it, right?
Yeah. Look, there's the people over here really just want to do good things for people, right? The people over here really want to do good things for themselves, right? Like that's the kind of the spectrum, right? I want to be in the middle of the spectrum where I'm doing really well for myself by doing good things for other people. Right? Why is that such a hard concept?
It's not.
You can do better by helping people. Our entire industry, every financial advisor out here, right? Whether they think this or not, they are making money by helping people have better lives. And so all we're talking about right now is what areas of their life are you willing to make better? And if you just cut that, if you draw a line there on, well, I don't want to do sustainable investing because it's hard. It's like, well, why aren't you taking that opportunity to make your client's life just that much better if that's good for them? Like, why not? Why not do that? Why not offer this? Why not offer that? I see it in a lot of different areas for advisors. Why aren't you thinking about launching a tax practice? Because it's going to make your clients' lives better if they can get everything done under one roof. Right? Why aren't you offering this tool? Why aren't you offering this? It makes your client's life better. Now, you might have a reason. You might say, well, because I don't have the excess margin to be able to increase my cost, and the gap between offering it and seeing any benefit from new clients because of it is too long and I can't afford it. That's a good reason not to do it. That's fine. You can't do everything. But if it doesn't cost you anything, or it costs you a little bit of investment and then you'll see the growth, we can't honestly disagree that offering a sustainable option to your clients is worse for your clients. It's not worse for your clients. right? It's
There,
just not.
there
So
there is an upfront investment that the advisor and the advisor firm has to make in some
yeah,
education.
they do, but that's true of everything that they offer their clients. It's certainly easier to offer sustainable options than start a tax practice.
Oh yeah, I mean we put it in a boot camp that's literally 3 modules of 90 minutes each, right? So we
Yeah.
give you all the tools to do it. So this is something that's doable and will add value to your practice. Um, Let me make sure we cover off the wife,
Oh
husband.
yeah, working. So here's one that I think a lot of people are,
That
are like, well, your partner, your business partner is your wife. Okay. Wow, that's a lot. Let's navigate that a little bit. So it's totally off sustainability, but I think I've seen you two together. I've worked with both of you on various things, and uh, as much as I'm talking to you right now, I kind of wish it was her because she's cooler
yeah,
than you.
yeah.
As you better agree with me or you're in trouble. But some days it's got to be really rough.
Well, yeah, there are highs and lows, right? With a marriage, with a business, and then you combine them two, and you get the we call it the super duper loop the looper roller coaster rather than the chugabug, the kiddie roller coaster.
Yeah.
But it is fantastically rewarding, and it was a conversation with your partner Spencer Sherman uh, that we had early on that really got us more comfortable diving into this business together. Um, and because we were trepidatious, that's what you hear, right? On the one hand, we're like, oh, it's really hard to work with your spouse. And then on the other hand, we look at each other and we're like, isn't the foundation of every small business since 10,000 years ago been the family unit? Like, isn't that what really has been?
Yeah.
Like, it's really,
Yeah.
like this is not anything new.
Every business used to be a family business. That's just how it worked.
Exactly. And so, but what Spencer said was really interesting. He says, I spent some time working with my wife, and when we did that, we realized that our communication had to be better. Our everything that we doing had to be just a bit better. And we don't work together anymore, but we came out of it stronger as a couple than we went into it because we were forced to deal with some of these things. And we just thought that was great. We thought that was a great opportunity. And so, we launched the firm in 2016 and it was in Marin, right? So we're in Silicon Valley-ish, we're kind of connected there. And the thing that was in vogue back then, JD, was the co-founder tech business, right? You'd have the CTO and the CEO or something like that, right? And the challenge was that they might not always be completely aligned, and so they would get these entrepreneurial startup coaches to help them with their relationship. So we hired one of those. Some of you might be more familiar with the term marriage counselor, but yeah, that's what we hired, and it was great because we got better on our communication, and it's.
So how often are you meeting with your? Here's the question: how often are you meeting with your counselor now that it's been whatever 10 years or whatever? Are you still doing that regularly? And when you're in those meetings, like what percentage of the time is it work stuff that's coming up because you're working together, and how much is it just the normal day-to-day like being married stuff?
Well, we're very lucky to find. It took a couple tries, and we eventually found the right person who could help us with the business, the personal stuff, and the parenting stuff as well. And one of the key messages was there's a language. There's a love language and there's a business language, and they're very different. And you have to be very careful when you transition from one to the other. You need to be clear about that. Like actually
basically, what room are you in right now? Are you at work or are you at home? So that you put a pretty big distinction between those two things.
We had to early on to but then we got better at it, and so we don't have to as much anymore. But one of the things that this counselor is really good at is giving us the tools to be able to do this on our own. So we don't actually We spent a couple of years with this counselor, and then now we have the tools to do it on our own. And then every once in a while, we'll get a touch in, a catch up, a question we'll go have another session, which has been really, really valuable.
I need to get a referral from you because I send anytime I have equal partners in a business that I'm coaching and consulting with, I recommend they go to couples counseling.
Yeah.
And I don't have a lot of counselors who understand business. So that's actually a really good niche. So definitely let me know who those are, and we'll share it in the comments for everyone if you have any good recommendations.
I recommend it. But then I was kind of forced into it, to be honest, because Sarah was much more experienced and much better at sustainable investing than I was back early. She started before the great financial crisis in London, working for an institutional investment firm that was getting requests from local governments for sustainable investments, and they didn't offer it. And so she went and put a couple degrees together, because back then there was no such thing as sustainable investing degrees. And so she was, she's been in this game a long, long time, knows all that stuff. And so it just made sense for us to, when I wanted to do this, and she wanted to do this, it would be weird for us to do it separately, right?
Right, of course. Yeah, you both want to do the same thing, so why not do it together?
Yeah.
So, as I think about the leakage of, your business and your personal relationship, like bringing your personal relationship into work is one issue. It's like, oh yeah, you're fighting, if you're not fighting, it's great because you get hugs in the middle of the day and that's awesome. But like, I think the bigger concern for a lot of people would be that it makes it harder to shut off at the end of the day. And so, yeah, you go to dinner together and you're on your date, but both of you are thinking about work, but it's the same work. And so, well, why don't we talk about that? It was, honestly, it was kind of an issue for like me and Brent at Abacus because we were friends before I started. And like we'd then go hang out, and a lot of the friendship stuff started, work leaks into that, right? And we're like, oh yeah, we're going on a hike, but we're talking about work the whole time. Oh, we're going on a vacation together, and so we're talking about work all the time, and our wives are ready to punch us in the face, or we're hanging out with the kids and we're talking about work and the kids are playing, you know what I mean? Like that happened all the time.
Yeah. Yeah.
So how do you create that boundary when that's all you want to be doing in the first place? You're like, why aren't we doing this? Because that's what we want to do.
It's a tough boundary because it's what we're passionate about. So we love doing it. Exactly. So we feel like it's work when we're talking about it and everything. But we did spend a couple of years in France, and we still have a house there. We go and holiday there. And this is a stereotype that is probably the truest one I know. You can immediately tell, if you had no ear for accents, right, who the Americans are on the chairlift or on the hiking trail, okay? Because they're almost always talking about their business. Like you'll be hiking along in the beautiful Alps and someone says, so this guy CC'd me on an email, and I said, wait a minute, the HR director isn't supposed to be CC'd on blah, blah, blah. I'm like, are you really talking about this like out here? And
so you're in the Alps, man.
The Germans or the French or Italians that speak a little bit of the language, they're like, oh yeah, what are we going to eat tonight? It's very different. So we're trying to be cognizant of that and take some time out of that. But to be honest, we need a little bit more physical separation from that. And the way we do that is you turn the computers off. Like that's the key for us. Like, at night, make sure those are off. Then we can have some time. That's the only discipline that we're able to apply to it because we'll have a brainstorm idea and we'll have to share it,
But it's fine because as long as both of you want to talk about it, then it's great, right?
Yeah, just don't ask our kids about how often we talk about it, because then
oh god, I bet they complain about it all the time, don't they? How old are your kids now?
17, 15, and 12.
So they started to, given it's a family business, like have they started to express interest in the family? And are you looking at like, oh yeah, I'd totally love to have my kids in my business. Or you're like, go get out and go find a job, kid. We don't have room for you. This is hard enough.
No, it's really interesting because they've gotten really interested in the investment part of it. And sometimes I want to question, like, how come you're not so interested in the sustainability part of it? And then when I ask those questions, they're like, duh, dad, like that's not an option for them. Like that's just the way it's supposed to be, And I I'm pretty certain this is the case. That has nothing to do with the fact that there are kids. That's just like that age. They're just like, well, why wouldn't, like, I don't understand, like, why you wouldn't,
As opposed to what? Yeah, right.
what, you're not gonna, you're gonna continue trashing the planet? Like, what? I mean, it doesn't make any sense to them, right?
Okay, boomer. My kids know that if they want to die, they call me a boomer, right?
Yeah.
It's funny because my oldest went to college for game design.
Okay.
And both my kids were super, techie, computery kids, as unsurprisingly, because I'm a geeky computer guy. But neither of them expressed, as we were growing up, really a whole lot of interest in this industry. And then senior year, my oldest calls me up, and I don't know if you've been following the game design industry over the last several years, but it imploded to the point that my oldest Adrian was sitting there going like, "Oh, all my friends are losing their job in this industry, and they are all, one, I don't want to join the industry because now there's no jobs, and how could I compete when I'm competing with people with 20 years experience who just got laid off for an entry level position. But also, like, all my friends didn't have good financial advice, and now they're all screwed, and they were making 200 grand a year, and now they're making nothing, and they didn't save any of it, and they didn't do any of the right things." And called me. I was in Australia for a dimensional tour from some speaking event, and I get a call from my oldest saying, "Tell me about the CFP, because I've heard you talking for my whole life about this stuff, and I have known it the whole time."
Yeah.
I wasn't all that interested in it because, like, whatever, I was 12. But like, it's been a part of my life the whole time. They'd hear me talking to clients in the car on the whatever drive. They hear me talking to my partners all the time because we'd go hang out with Brent and his family, and so this was just ever present in their life. And I thought they had no interest until now. My oldest is working at a financial advisory firm, studying for the CFP and the EA, and is going to be doing tax prep for people, and has suddenly joined our industry. And a lot of people are like, "Oh, that's so cute," but like, I had nothing to do with that. Like, he called me and was like, "What should I do? Right? How do I break into this industry? Because it seems really cool. What's it like? Tell me about what the experience is being in this industry. Like, do you really get to help people, or are you just selling stupid stuff?" You know what I mean? And that was really cool. Now we're not working together, but like, the funny story is I actually was running a recruiting firm at the time, and was actually the one to place my oldest at the firm that he's working at. And so not only did my kids start getting a job in the industry, and so I didn't have to help with rent anymore, I actually earned a commission on it. So that was pretty amazing.
Nepo squared? What is that? I don't
know.
it
Was actually I had an internal debate for a long time. Like, should I offer to waive my fee because you're hiring my kid? And I'm like, which one's I didn't discount my fee at all, because I didn't want to put any pressure to choose my kid over the other candidates that I sent. And I fully disclosed, but it was really it was kind of a moral dilemma for me. I'm like, do I earn the commission for placing my kid, which sounds nonsensical, right? Or do I not, which is actually pressuring and creating a nepotism sort of situation, kind of, right? Giving undue pressure to hire my kid over someone else because it's cheaper. And luckily I didn't have to discount anything, so I got paid, and Adrian was the right choice for them, like, on its face, and that's great. But it was really fun to be able to be part of that, and to help him kind of grow into the industry, and to find the career, and to find his path, and that was really rewarding for me.
Well, I think those types of questions and conflicts might come up more and more often. I mean, we see this a lot, right? Where the offspring of people in financial services gravitate towards this space. And I have to remind myself that it's not because of who their parents were. It's objectively the greatest industry and the greatest opportunity, I think, going forward. It just literally is. If you look at the different things that kids could do to get a career going, it's just hard to compete with the opportunity of being a financial advisor for my money.
Yeah, it's definitely a good gig out there for a career. There's no question. It is funny. We talked about the historical, like every business was a family business, and I've thought a lot about that. And you think about it like, okay, well, yeah, if you're a plumber and your kid has grown up around plumbing, well, they're probably going to be a better entry level plumber than anyone else because they've incorporated into their lifestyle the idea of knowing about plumbing. It's natural to them. They've just seen it. And so you see a lot of that. What you grew up with is frequently what you're best at.
JD, my you're in the coffee and the other Dungeons and Dragons and all these things you geek out. I geek out on solar and battery storage and stuff. So I'm looking at some of these YouTube videos, and this one guy has this great YouTube channel, and he's talking about some really geeked out stuff about solar battery and whatever. And there's always a guy off camera handing him things and stuff like that. And about the third video I'm watching, this off-camera person says, "Dad, shouldn't you plug this in here now?" And I didn't know that was coming or whatever like that. And then the kid shows up on camera and he's like 11, right? And he already knows how to like construct a solar battery inverter, plug it into the transfer switch. I mean, I was like, that kid's gonna be like absolutely ninja at this stuff. Already is, right?
Yeah. So it's funny, like this whole, like I get the fight against nepotism or whatever, because frequently the idiot kid is taking a job from someone who's not an idiot, which is always bad. But on the other side, like you can't turn it off because frequently those people are the best. Like, why are all these like actors kids, becoming successful actors? Well, because they've been acting since they were zero, right? From beginning, they've been around what it takes to be a good actor. So are they going to be good? Yep, maybe. Maybe they're going to be better than someone who didn't have that lifelong educational opportunity. Of course they will. Not everyone, and some of them are terrible, as you see those out in the world, right? Especially if they're running studios. That's usually when they're the worst. It depends how rich your parents were, like if you're the billionaire's kid, maybe you're trash. You're just like, your kids, you're not out here like, taking advantage of the whole world through unethical means. They learn something different from you than they would from that kind of privilege. So sorry, my socialist roots are showing.
Well, I talking about socialist roots. One last thing, we should probably go, but my sister was a Marxist, and so my mom kind of leaned that way as well. And so I grew up thinking that, profit was at the expense of the worker. Like that's how capitalism worked, And when I learned about this business of family investment advice from Dan Wheeler, and he's like, no, you can actually help people be more successful financial and make good money from it. I was like my head exploded, and I was like, that's what I have to do with my life. Like it was that moment,
Yeah, I think we had a very similar experience growing up. In fact, I've seen some of your childhood pictures with the Volkswagen van, and I think our parents had the same van. Almost died in that van because the little top thing was falling on us when we were kids. And I think we had a very similar experience with our parents. Definitely the same kind of messages. Well, we probably should wrap it up. I didn't have a whole lot of audience questions this time, but we didn't really have time because we just kept yapping the whole time anyway. So that's fine. Sorry, people out there who are listening, you didn't get a whole chance to jump in, but you also didn't throw out a lot of questions. So that's it for you.
Yeah. You know where to reach us. Sam at vertasset.com if you want to reach me, and you know how to reach JD.
Yep. I'm easy, and feel free to post questions in the comments if you're watching this later on YouTube. We will monitor it and make sure we get those questions answered. As Sam mentioned, you can reach out to them at vertasset.com. They're fantastic. We used their funds. They are the coolest people ever, and pretty soon they're going to have a checklist for due diligence on investment managers out on their website with their pre-answered version of those questions. So just go ahead and go to their website, and you can get that and improve your own sustainability. We'll even post a link to your website, and I won't post your email down there, although they heard it, but unless you want us to, you can post that in the comments as well, and then everyone will go find you.
That's fine.
Thank you for coming on to the show and having a nice little chat. It's always fun to reconnect, and
Answering all of my questions. I got some great stuff here.
well, good. Well, hopefully
you
it's
don't mind,
valuable
I'm
for you.
going to share widely as I continue my career process of taking the best ideas and sharing them.
I love it. It's the thing I love most about this industry, how much people share with each other. And as we talked about earlier, financial advisors refer to each other all the time. We share knowledge all the time in ways that, I've been in a lot of different industries and I've never seen it like this before. Like, there's no other industry like this where people like you and I are sitting here sharing all our secrets and like, oh, you want to know how I do it? I do it exactly like this. Here you go. You should copy me. It doesn't happen in the other industry. They just start suing each other, but here we are just like giving it all.
Yeah.
Here's everything we do. Enjoy, because we know that that's not why people work with us. They don't work with us because we hoard knowledge. They work with us because we share knowledge. So thank you for sharing your knowledge.
Thank you for sharing.
All right. Bye, everyone. Thanks, Jesse, for listening. Bye.
Bye.